The average price of a home in New York region continues to climb. The Canadian Real Estate Association expects low interest rates to keep the national market on par with what's been seen in the last decade. But what does all this mean for York Region and Bradford, West Gwillimbury? That's next on Perspectives. Hi, welcome to Perspectives with Jamie Young. I'm obviously not Jamie Young. My name's Mark Vasilius, and I'm your guest host for this evening. We've got what I consider a fantastic show because I love real estate. I love all things real estate. We're going to be talking about, in general, a roundtable discussion with four very good-looking, very knowledgeable real estate agents. And as I was joking before, four real estate agents at a table can certainly make a lot of jokes. With me right now is Tina Sibold, Sales Representative, Royal LePage York Community Realty, Marvin Alexander, President of Keller Williams Realty Centers, Kathy Proudfoot, Salesperson, Royal LePage York North Realty, and James Hussaini, Broker of Record, Home Life Dreams Realty Inc. Brokerage. Now, guys, we have a lot to probably cover. We got an hour. Do you think we'll be able to cover all the topics we want to talk about? We got housing bubbles, we got price escalations, we got low interest rates, we got the CMHC telling us there's nothing going on with this. Who wants to throw something out on this table and begin this conversation here?
Tina does.
Tina.
I think Tina does. She's closest to you.
Well, if I were to say to you that there is a housing bubble, I can't afford a home in New York region. Tell me why. Tell me what's going on. What do you think of that comment?
Oh, I don't think it's true at all. I think that buying a house is as affordable as it has ever been. Oh, rough start there.
Have a drink. Have a drink.
You know, I would say that there's no bad time to get into the market, and if you're a first-time buyer, the only challenge is that perhaps the banks are tightening up their criteria a little bit.
Right.
So if you're marginal with your credit, with your payment history on certain things, then maybe you'll have some challenges. But if you're solid and you've got your down payment together, then I would say jump in now. Don't be waiting for prices to drop. That's what I've heard people say, because you'll never secure an interest rate like you will now. So,
well, let me ask this. Does anyone have a figure of what is the average home price in York region cost right now?
I think last time I checked, it was a little bit over $500,000. It was somewhere close to
$500,000. Sorry, I got to take a deep breath. $500,000 to buy a home. I'm over 50. I hate to say it. $500,000 is a lot of money.
A lot of money, yes.
How can people afford a $500,000 home in York region?
I think it depends on your perspective, how you look at this issue. If you're looking at this issue from just price point, yes, our prices are much higher than it has ever been. The peak of real estate was sometime in late 80s, early 90s. I think exactly it was somewhere in 89 that we had average prices in this region, which includes, of course, Greater Toronto area, which York region probably is part of that region. Our prices were somewhere close to $300,000. Today, our average price is very close to $500,000. We are reaching that point. So if you look from that perspective, yes, prices are much, much higher probably we have ever seen. I mean, looking at history of these numbers, and probably we have never seen these numbers ever before. And at the same time, if you look at it from income growth, and even from that perspective, probably it's not looking good because our incomes have not increased as much as before. Things have shifted in our economy, starting from beginning of 70s. I mean, to some part of 80s and 90s, most of our jobs were in manufacturing. Most people were getting paid well. It was high wages. But, I mean, these days, as we all know, most people work in Walmart and Tim Hortons and whatnot. So, I mean, some people work double shift. So I can see that shift in economy. Again, if you look from that perspective, the income growth comparing to housing prices that have increased, there is a big gap. It was somewhere close to 25% a couple of years ago. It's getting closer to 30%. That's a big, huge gap between your income growth and the housing price increase. Having said that, I mean, let's think a little bit more positive. If we look back at these numbers after the crash of '89, somewhere beginning of '90s, the affordability chart shows us we are just in line with those numbers. Let me explain a little bit what does that mean. It means the banks are ideally looking at our household income to spend very close to 32%. To be exact, it's 32% of our income on housing. Having said that, if we are somewhere close to that, we're good. I mean, if we look at the numbers for the past 10, even 20 years, it is just somewhere close to less than 35, that number that we are spending our household income on housing costs. So it's very affordable. And
I don't want to jump in, but you're referring to, if anyone out there is interested, it's called the Housing Affordability Index. Right. Mm-hmm. And if you were to Google that, you would see. So you're saying it's what's the percentage now? It's 35, and the ideal rate is 32.
32%. It's good. I mean, if we are over 50%, we are in bad shape. I mean, things in Vancouver, for example, I have seen numbers closer to 70%, which is, I don't know where they get money for everything else in life. Sure. I mean, that's horrible. But here in Toronto and Greater Toronto area, we're somewhere close to the long-term trend. I mean, the only time that trend was broken was in '89. We were spending more than 55% of our income for housing costs. And it is the affordability is low. I mean, and there is only one reason that can explain that, and that's low interest rates. So because interest rates are low, that's why we can afford these houses. I think the real question, in my opinion, is not about the price of housing. It is how long these interest rates are going to last.
Well, if I don't mind, I wouldn't mind backing up a little bit.
Sure.
But what is, asking you other ones, what is driving the house prices right now? Why are prices escalating at the rates they are?
Sure, yeah, I'd like to jump in on that. Everything is supply and demand, and that's what pricing is fueled based upon. So right now, there's a very low supply of product in the marketplace, and as a result of that, prices are continuing to rise. There's a low availability of housing, and
so again, I don't want to back up, but I've been reading and hearing a lot that, oh my gosh, there's builders that are building all kinds of stuff. Is there a segment of the market that I'm missing? But the general idea is that they're building them as fast as they can sell them. But who the heck and what is driving the prices?
Well, I'm in agreement with James. I think that low interest rates are certainly perpetuating the sales. I mean, that's a big part of it. That, coupled with a lack of inventory, is causing this market to perpetuate the way that it is. That's what's happening.
Now, I know that we cover the area of Bradford, West Gwillimbury. Is there someone here who specializes in that? Tina, tell me what's happening a little bit up there. What's driving the prices up in that area? Or what do you think? I mean, you're
just Tina being there is probably helping.
You're trouble tonight. Everybody, there's certain pockets of Bradford that are very popular. For example, there's a subdivision by Brookfield, Grand Central, and it blows me away the prices that they're getting for the small lots, but the beautiful big houses. And everybody wants to be in a new house, and so they're selling out the day they're releasing anything. They've got people lined up and they're selling out. Those people have to sell their houses to move into those, and it's crazy because they're getting the prices that they want there.
As again, I'll play the dumb card here, but what's driving that demand? Like your good point, supply and demand. Is it the fact that we opened up a Honda plant in Bradford?
No,
what is it?
Because we're affordable.
We're affordable.
We are affordable. You come from the GTA section, you come up into York Region, you have great services up here, you have great schools up here, you've got fabulous transit up here, and the prices are half of what they are in the GTA.
Ah, so you're when you say they're affordable, I would like to throw in the word compared to
by
what?
Comparison, right?
But we're comparing to Toronto. So I guess it's the trade-off, saying, well, you know what, Bradford is affordable compared to Toronto.
Well, globally, we are very affordable. When you look at us globally, you mentioned Vancouver. York Region is prime for people to purchase.
I have a couple of points to say, to her point, and maybe Tina's town, why that's happening. I'm not sure which one to jump in first. Let's talk about Tina's town. I think that we have a phenomenon in real estate. It's called ripple effect. In booming towns, the towns that are going through some kind of a boom, it affects the neighboring towns. So surrounding that town that I can't pronounce, I think it's Bradford, West Gwillimbury. We have close booming areas like Newmarket. So when things get a little bit pricier here in this town. People don't mind traveling about 10-15 minutes, or probably is it about 10-15 minutes north of here, Newmarket. So it's more affordable. I mean, because this town is booming, then people are thinking of moving a little bit north of here, which they don't mind traveling but paying much less. So as she was mentioning, it is much more affordable.
So when, again, sort of back up, but just again for our viewers, the ripple effect, you're saying that basically it's like a wave. As it goes further out,
exactly.
the effect of it decreases, but so the closer you are to Toronto, the greater that ripple effect would be in terms of moving further and further out, the prices actually will drop further and further. Is that what you mean?
Exactly. And I think from investment point of view, I mean, I advise investors, real estate investors, and I always advise them to not buy in booming town, but rather buy in these towns that are surrounding the booming towns, which will, the ripple effect eventually will reach those towns. I mean, I have videos recorded on YouTube a few years ago. I was suggesting for my real estate agents that are working for me and their clients to buy in Stouffville. This is just north of Markham. The town of Markham was booming and prices were a little bit expensive, and we saw that. And now prices in Stouffville is up there.
Are going up.
Yeah.
Absolutely.
You know, sorry, I was going to say too, I think part of this is that as transit expands, like, I mean, if you look, I've been selling real estate for 20 years in this area. So as you see GO Transit and other means of transit expanding, it becomes a more acceptable commuting distance between, let's say, Newmarket or Bradford or Aurora, East Gwillimbury and Toronto. Mm-hmm. So, you know, that factors into play. It makes what used to be a burdensome type of commute now much more appealing.
What I mean, every time I open up the paper, I'm reading about a housing bubble. What does that mean for, like, if we were to bring it down to, I know everyone talks about location, but is there a housing bubble in York Region right now?
I would say no.
I would say no.
And you know, the definition of a bubble is interesting too, right? They define a housing bubble as basically being where you're in a shortage of inventory, which we have, high demand, which we have, and then all of a sudden there's a shift where there is an influx of product that comes on the market, demand either stagnates or regresses, and that's the bursting of the bubble. That's the sort of analogy that we look at.
Then a little bit that I know of real estate isn't a bubble. A lot of it is driven by what they call speculation. Is there any speculation happening in York Region, Tina, or in your area, Bradford, West Gwillimbury?
Well, I think there is, but I think that the bubble is not really an issue, because the pricing of the houses, although it's high, when you see people, like, for example, if you want to talk about bidding wars and that sort of thing, we're not seeing houses sell for an outrageous amount of money above their list price, like, say, we've seen in Toronto.
Yeah, which we hear.
So the issue is that we don't have to worry about where deals aren't appraising out or people are maxed out with their loan to value or the values of the house, because even when we are seeing the multiple offers or the bidding wars, as people know them, the prices still aren't going outrageous. I still think that they're at a relatively fair market value given what's going on altogether. So I think you run into more of a problem when people are paying those outrageously high prices and then they're stuck with a home when all of a sudden there is more product on the market that isn't worth what they paid for it. So I don't think we're going to see that problem the same way.
Right.
Well, and it's also our obligation at that point to ensure that that house is going to appraise out at what that buyer is going to pay for it.
Absolutely.
So I think, you know, we have to work hand in hand with the banks and the mortgage companies, getting an appraiser in to ensure that we have done the best for our buyer or our seller.
You're referring to being the real estate industry that
as a whole
that you're representing. Yeah. So.
Yes. Sorry. Did I interrupt you?
No.
Okay.
Go ahead.
I think maybe it might be time to get a little bit deeper into this topic of bubble, because there is a lot of conversation for the past few months in different kinds of media. I mean, you open up a magazine that they're talking about some kind of...
James, I don't mean to cut you off, but you're saying exactly what I would want to get into, which we will. We're going to get into more discussions, more bubbles, more discussion on bubbles, because I think Marvin here has got some graphs and stuff that we're going to get into, but we're going to take a quick break and be right back on Perspectives. Hi, welcome back to Perspectives. I'm Mark Vasilius, and we're talking about some, I guess it's bubbles here. We talked about, and specifically a real estate bubble. Now, Marvin, you were good enough to bring in some charts, because obviously we were preparing for the show, and a lot of you have been reading and hearing about a real estate bubble, and I think that we should examine that, especially in the New York region. But Marvin, we have a slide here that you can see that, Marvin, why don't you take it over from here and tell us what's up there.
So this slide is provided by the Canadian Real Estate Association, and essentially what it does is it addresses the type of market that we're in.
Right.
And I think it clearly speaks to the point of a bubble or no bubble in this case. So what you can see is that the dash marks that run horizontally on that graph indicate a balanced market. So any type of activity in terms of sales that falls in between those two hash marks represents a balanced market. Above it would be a seller's market, meaning that there's a lack of inventory, and below it would be a buyer's market. So you can see that going right through to 2011, we're well within what would be deemed a balanced market, and essentially that means that there's no undue pressure on a seller to sell or a buyer to buy. It's a very balanced, stable market. A bubble, as we talked about earlier, would be when we're transitioning from that balanced market to an excess in inventory, which is obviously not the case.
Which we can see, it was 1989 or whatever that graph of the purple, I guess it's the purple.
That's right.
So the crash. Do you think Toronto's in for a crash? Because people have talked about condos creating, like, you know, we certainly hear about Vancouver and Toronto now. The latest report says that Vancouver's in a bubble at $700,000 a home. I would think they're right. And Toronto's in a bubble because they're just, you know, the whole condo thing. What comment would you make on that then?
It's still affordable, though. Toronto's still affordable at the entry level for condos.
So
when you look at Toronto and you say around 440 for a condo versus 880 for a single detached home, where are you going to go into the entry?
So you're saying that spread between a condo and a home is why it's not a bubble?
I don't think it's a bubble. Okay. I still think that Toronto is very affordable. I do think that the number of condos that are being built, they may have an issue, but we have lots of immigrants coming in. We have lots of people moving in. Where are you going to put all these people? They have to live in Toronto. They have to live where they can work.
And I guess, as you say, a condo is a starter home.
It is.
Are there...
Or a finishing home.
Or finishing home, good way to put it. Are there affordable, is there affordable housing in York Region?
I think so.
Sure.
Absolutely.
Where?
Absolutely.
Everywhere.
Yeah, it is pretty much everywhere. If I brought along another graph. I don't know if we can go to that in a moment, but basically what it does, it puts things in perspective. It shows you that our housing is as affordable now as it's been since 1989, as it's ever been. So I think the graph is up here now. So this really puts things in perspective. So it'll show you 1989 versus 2011. The price of bread in '89 was 67 cents, $2.78 today. The price of gas, you can see 97 cents in '89, $2.84. This is per gallon. This is a U.S. chart, but it holds quite true to Canada as well. New cars, you know, show some pricing there. Existing home, this is a median price right across North America. This chart is provided by NAR, which is the National Association of Realtors, and then it'll show mortgage differences in rates, and that's what really makes it up. But the important factor on this chart is the monthly payment, and you can see the monthly payment today is basically the same as it was in 1989. So I think affordability and expense are two different things. Houses are very affordable. Interest rates are very low, and that's the driving factor.
You're bringing up an excellent point, is affordability versus expense,
right.
Which is that without the interest rates, I guess, we wouldn't be in this shape. We would basically be in a bubble then.
That's right.
Would that be a proper...
For sure.
I think so. Mm-hmm.
Wow. So is there, again, for people wanting to get into the market, you know, York Region is more affordable than Toronto. Yes. What, you know, what would they be looking at for you know, mortgage, an average home? We can see at 166. I don't think that's an average price of a home in York Region.
No.
So we mentioned 500. Does anyone have off the top of their head what that mortgage payment would be? Or
somewhere 2,300 at today's interest rate, which is, I mean, looking at the past 10 years that I'm in this field, it's very affordable, very comparable. So I mean, at the end of the day, it boils down to a couple of key factors. Interest rates, obviously, as mentioned. I mean, if there is a shock in system, then if interest rates go up, when I say up, not just by 25 basis or even 50 or 100 basis. When we are saying shock, it is somewhere close to 3-4% higher than today's interest rates. So then at that time, we will be in trouble. But most probably, I mean, we don't have crystal ball, but most probably, I don't think we will have 3-4% increase in interest rate anytime soon. I mean, at least not in the next couple of years. So having said that, by the time we move on through this stage of couple of years, we will be in a more stronger recovery mode. Right now, almost everyone in the market agrees that we are in recovery mode, but we are in slow growth recovery mode. As we know, real estate is directly dependent on economy. So if we are in slow growth rate, in a couple of years, by the time we are done with problems in Europe, we are done with problems.
Can I jump in there, because I kind of wanted to bring that up. I mean, we hear about what happened in France recently with the change of government. We heard about what's happened in Greece. How does that affect me, a homeowner in New York region? I mean, I know real estate is a micro thing, and that's a macro. A change of government is macro. But if we link, real estate prices to the economy, and France starts to go south, Greece is certainly on its way, how does that affect us here in York region?
I think York region is not an island. We are part of connected world in this globalized world. So I think you pointed something really interesting. It is that if we look at the macro level, at the end of the day, for real estate market, interest rates are the key influencer that will, at the end of the day, make up this, whether it is bubble or not. But at the micro level, I think real estate is very local. So, I mean, national average prices might be declining, but if there is a growth in population in York region prices will still go higher. And as we know, York region is growing. So I think that those are two conflicting, contradictory point of view that you have to look at both of them. I mean, things that are happening in Europe, I have my personal opinion that things will sort out. We in the Western world are much stronger. We will overcome these challenges. I don't see a concern, but I think those are the shocks, the worst scenario cases. I think we will overcome those issues. So I don't see a problem.
Well, when you mention shock, for the other guest, you mentioned a shock like 2008 when Lehman Brothers went down. That shocked the system. That created a credit freeze. It affected credit rates, and we're talking that the main driver right now of a non-bubble is the fact that interest rates are low. Right. A shock like France and or Greece and or Portugal and or Spain and even Italy, I mean, that's the European economy is equal to the U.S. economy. If that's a second shock, what do you think is going to happen to interest rates? Are interest rates going to be affected at all? How is the economy going to be growing if we have a shock like that in Europe? Because Canada ships what, 20% of our GDP goes to Europe. That's a lot of money. So would there be any effect here in York region?
I mean, I don't know if I can jump in. I mean, even if, let's say, worst case scenario, things go south in Europe, I think Canada has a very strong economy. Our banking system has proven to be the best in the world. And we have few other things that we are supplying to the world, including water, fuel. I mean, our oil industry is #1 in the world right now. I mean, Western Canada is in boom. I mean, there is jobs and they're looking for people to hire. There is no one there and they're looking for more people. And at the end of the day, as with that, going with the idea of ripple effect, the whole Canada will be in better shape comparing to the most, relatively comparing to the most other parts of the world. So I'm not really concerned about this country, and especially York region. From the 200,000 people that approximately come to this country, almost half of them settle in Greater Toronto area, and most of them come to York region. So, I mean, as they say, if you want to grow a region or a city or a town, you have to bring more people. And you can only bring people in two ways. Either you can create jobs, or you can have a good public transportation, which means people that have job have access. It is more, you're facilitating the facilities that that will take them from York Region to somewhere else that they're working. So the good thing about York Region is that they have a vision. As we can see, a lot of things are happening. Viva transportation system, if you go, there is construction across Highway 7, across like Yonge Street. Things are happening in City of Vaughan. There is a new subway line coming from all the way from downtown. So these are the things that, I mean, first of all, we are protected as a country, and secondly, as this region, we're doing a lot of good things that will most probably will protect us with even worst case scenario like a shock happening in Europe. So I'm not that much concerned. And the other shock, as we were mentioning, is interest rates. As I said, I don't think it will increase. The US Federal Reserve Bank has kind of, I mean, promised us that it will not increase by 2014. So if they are not increasing, most probably will not increase.
James, you're bringing up some excellent points, and we're going to continue on in Perspectives after this short break. Hello, welcome back to Perspectives. I'm Mark Vasilius, and I'm talking with 4 esteemed real estate agents, and we certainly are trying to cover a lot of territory, but I'd like to bring it down now to a little bit more of a local thing as to what is driving the house prices. I know a lot of us who already live here are thinking, this is great, I got a $500,000 home, all I got to do is just, you know, pay my taxes and pay my mortgage, and it keeps going up. But for people wanting to move in, what do you think is creating this market for them to move into this area? Well, and you cover West Bradford, Gwillimbury.
Bradford, West Gwillimbury.
Darn it! I knew it was that. Yes. But go ahead. Tell me, like, what are the amenities? What makes it so great to live there?
You know what? Bradford, West Gwillimbury, first of all, by nature of its location, if nothing else, I always call it the center of the universe in Ontario, because where we're located, we are right at the 400. So in 40 minutes, I can be at the airport or downtown Toronto, or in 40 minutes, I can be in cottage country. How much better does it get than that? On top of that, the town has really taken advantage of the infrastructure money that has been offered over the last few years by both the provincial and federal governments. And so we have been able to build a beautiful new rec and leisure center that serves the community. I forget how many, 40,000 square feet or something crazy like that, with pools and ice pads and so forth, and a brand new library cultural center. And these are things that bring the community together and make the community an inviting place to live. So those things, compared to, added to our location in the area makes it a wonderful place to live. And for people who have to commute, for example, my husband works in the city of Vaughan. It's a 35-minute drive for him. And so we're actually seeing a lot of people come up from the Woodbridge area and the Vaughan area saying, wow, you know, the house that I have that's $600,000 in Vaughan, I can get it for $400,000 here.
And that's a great point, Tina. So York Region, big area. Would you say that even within York Region we are seeing price disparity?
Oh, yeah.
Oh, yes.
Oh, absolutely. Although it's becoming less and less so. It used to be, I mean, I moved to Bradford in 1991 because at that time we were looking to get into the housing market. We were renting in Newmarket and we couldn't afford Newmarket at that time. Prices were high. So when we looked around, we were looking for a community where it was going to be more affordable, and Bradford certainly fit the bill
10
with
minutes
that.
north.
Absolutely. Well, at that time where, now these numbers will shock everybody, but at that time, we got a Link home in Bradford for $155,000 in 1992. And at that time, we couldn't get anything for less than $200,000 in Newmarket. And being a young couple starting out at that time, that was all we could do. But now I noticed that the disparity is becoming less and less. So now you look at what your money gets you in Bradford and Newmarket, and it's becoming a little bit closer, I would say.
Is it because the amenities are becoming more attractive? I know Bradford was fairly small town, but only recently are we seeing these infrastructure changes come in, right?
Well, and the growth, I mean, right now we're at 28,000 people, and it's projected that we'll be at about 50,000 by 2026.
Wow. Now, Marvin, I know that you handle more south of there. Would you say that people like Tina are moving further north because they can't afford to live?
They're just moving here because of Tina. They just want to be a little closer to Tina, I think. In the Newmarket, Aurora area, we've seen a massive transition as well. 20 years ago we had a population of 35,000, and it's pressing 3 times that.
Wow.
And these big box stores, these superstores, these outdoor major plazas, and all these things. I mean, they spend thousands and thousands of dollars researching where they should be developing next.
Right.
I mean, it's not happening by accident, right? So, the trend definitely is to go to wherever people are going to, sustain those sorts of amenities. And when you see big box stores lining, the border of East Gwillimbury and Newmarket, and then all along Aurora, the expansion of these amenities is not by accident. They know the intended population growth. They know it's going to further draw people here. And quite frankly, Aurora has, at last count, the highest income per capita of any household in Canada. So there's good reason why those stores should be opening. There's good reason why people are making the commute. So.
Wow. So even within York Region, we are seeing prices that are changing. But amenity, you're saying that amenities are obviously keeping people here. And I want to just touch on quickly on the infrastructure thing you mentioned. What about property taxes? I mean, over the years, I know we're talking about a bubble, but I know I've read or heard from a lot of people that are saying our property taxes are really escalating. How does that affect home ownership?
Mm-hmm.
I think it depends where you compare it to. If you compare,
again, it's a comparison.
Yes, of course. If you compare this with Toronto, yes, we're a little bit higher. If you compare it with Durham region, we are much lower. So it depends where you compare it to. I mean, it is somewhere at a reasonable range. I mean, we are a little bit, or probably a lot lower than Durham region.
But if you want but if you want all the facilities that we need to have, the infrastructure that we need to have to support the population here and to make it a great place to live, such as the schools, the parks, the hospital.
Right.
Mm-hmm. The hospital's expanding. It's becoming a teaching hospital. It's a regional center for both cardiac and for cancer. You have to have that tax base in there in order to draw those people and to have places for your kids to go and play soccer and hockey and swimming. So I think our taxes are very much in line with the other regions for what the services that we're providing.
I absolutely agree with her, and on the top of that list for me is transportation. Transportation, public transportation, plays a key role in expansion and growth of a region. And York region, as they're expanding continuously the transportation system. They're coming up with some long-term plans for different cities, in Markham, in Newmarket, in Aurora, in Vaughan. So everywhere they're having these public transportation that will connect people to their workplaces, to Toronto, to Greater Toronto area. That is the most important factor that will play a role. Everything else is important, but in my opinion, that's the most important.
But if we, if I can put a conflicting viewpoint on that, if we put the highest income in Aurora, people like that don't take buses. They would drive.
I think from a commuting perspective, yes. However, like within the community, they do have a necessity for transportation. Teenagers and that sort of thing, it's kind of nice to know that they can get around the town without having to rely on mom and dad to drive them around. So I agree with your perspective in terms of a commuting perspective.
Right.
Most people in Aurora will have, and Newmarket and the surrounding areas will have ample cars to get to and from and won't necessarily rely on transit. But within the municipality, it's getting that big now that they'll need transportation locally.
I a little bit don't agree with your point of view, Mark. I think if we provide good quality transportation system, people will use it. I personally prefer to use public transportation rather than driving. You can relax. It depends if they're good quality, they have more frequent service. Look at people in Europe. All sorts of people from all walks of life with all kinds of backgrounds and income, they all use public transportation. So far, unfortunately, in this part of the world, in North America, we didn't have a good transportation system. York region is trying to do that to some degree. If we have it, I think people will use it, even high income. So,
but I think
I look at it from different perspectives.
Yeah, but and granted, then I'll counter that and I'll say, you go to Europe. You got countries that are you can drive across in a day. So, when people from Europe come here, they go, oh my God, it's nothing but fields. Oh
yes,
my
true,
God, you got
true.
highways that go forever.
Right.
So our public transportation network can't be compared to European only from the distance wise. And
I agree with you, but we are trying to do that. The government of Ontario is doing that. I think they had a plan for Move 2020. Hopefully it goes through. It is coming through some kind of challenges, but I think if we implement those plans in long term, we may not necessarily be as effective and as efficient as Europe, but we will be in much better shape than today.
But what would you say though, with living in York region, people who have to commute to Toronto? The traffic. Is that going to be great? We got all the amenities, but oh my God, I got to work in Toronto. How do we get around? How do people?
It's great.
Oh, the GO train.
Yes, my sister.
Good answer, Kathy.
I have them sometimes.
My sister works at Princess Margaret Hospital, and she takes GO train, and she's very comfortable. Yeah.
But if you look at our communities, not everybody is commuting to Toronto.
No.
Right.
A lot of our communities are now built on the whole idea that Kathy was talking when we were in the break about we work, live, and play,
right,
all in the same area. And so I think you're noticing a shift that way. Mm-hmm. And also with respect to the transit, I agree with what Marvin said about it's great for our teenagers to get around so we're not driving them around. But think about one important thing is the aging population and how many of our seniors are unable to drive anymore and need to be able to get around still. And so, the older lady who needs to go to the pharmacy to pick up her prescriptions or do her errands or whatever and doesn't necessarily have four wheels any longer. So I think public transit is very important when you think about our aging population.
Tina, that's an excellent point. And I guess I want to bring up the, dovetail to that, is that the aging population, they may not necessarily want these $500,000 homes. They may want a $300,000 condo. What would you say that if, for an aging population that, living in York region, is it a viable solution? Are there areas within York region that an older person can settle in and live affordably?
Sure. I actually brought some, sorry, Kathy,
No,
do you want to go?
ahead.
Okay.
You go ahead.
So I brought some condo prices to give you an idea. So
Excellent.
in Aurora right now, as of today, starting prices for condos are at $294,900. $294,900. In East Gwillimbury, there's currently none available. Georgina, starting at $184,900, and in Newmarket, starting at $185,000. Wow. So $185,000 is quite affordable for a condo, right? So
now these are new, or are these resales?
these are all resales, right?
Are there? I mean, we hear a lot about condo building in Toronto. Is there any condo building happening in York Region?
Yes.
Yes, there
It has to happen. We are required by the government of Ontario
That's right.
that at least, I think, more than 40 or 42% of our new housing should be high density. So we have no option but to have high density, which is either high-rise buildings or row of townhouses.
in the Ontario places to grow, that's what you're referring
Exactly.
to, right?
Yeah, the difficulty though is in Newmarket, and I've had this conversation with, mayors of all the different municipalities. The issue is that there's not enough of a disparity between the price of a condo and the starter price of a house. So the cost of construction for a condo is, barring the difference in price of land, is basically the same. So it's the same amount of cement, same amount of basic work. Unless you're building downtown, there's some extra costs. So, if it's $250 a square foot, which is a pretty good estimate to build something, and then you have to factor in land and all the soft costs, development charges, and so on and so forth, it becomes somewhat prohibitive when the cost of a condo exceeds the starter price of a house. And that's part of the battle that we're going through in our municipalities now. In order to make it, to build it, to make it work, it's difficult because we'd have to bring condos in at a price that exceed the starter prices for housing.
Marvin, you're bringing up some excellent points. We're going to continue on with this conversation on Perspectives. We'll be right back. Hi, welcome back to Perspectives. We're going to be, we're talking about real estate roundtable. We're kicking around many ideas, but we've never really touched on more of what, I guess, the investment side of real estate, because as prices are escalating, a lot of people are looking to their homes as a bank, as a form of, and that may be a good thing for some people, retiring, may be a bad thing for other people who are creating debt. Now, I know, Marvin, you again very graciously has supplied some slides. We've got a slide here on home prices and basically a trajectory. Marvin, why don't you tell us what it's about?
So again, this chart was provided by the Canadian Real Estate Association, and what it shows is the historical appreciation rate. That line that you see above the bars in the graph show what historical appreciation at 4.2%, which is a healthy appreciation, a normal appreciation would look like. And as you can see in Canada, actually between 1994 or 5 up until around 2005, we were well below where we should have been appreciating. Prices didn't rise as quickly as they should have.
And I don't mean to cut you off, but when you mean they should have, who determined the should have?
Yeah,
Like, where does that come from?
I'll explain that to you. So, first of all, based on our American counterpart is one comparison.
Okay.
So we look at North America, and we're well behind that trending average. So it's really only until since 2007 that we actually started making up ground. So if you go back to that chart and look at it, you'll see that we're now just right on where the chart should be trending. So we're really, I mean, despite the fact that we've had these increases since 2005, we're really where we would have been had we slowly gone up year after year at the historical rate of appreciation, which is 4.2%.
So you're saying we're actually, in terms of appreciation and that whole, bubble conversation, we're actually right on track.
Yeah, we're right where we belong. We're right where we should have been had we been just going up at even intervals based on this chart. That's right.
So why is it that that when I hear the figure $500,000 for a home, it still shocks me a bit, as an investment, a home is a person's biggest investment. How do you sort of wrap your head around that, or how can maybe people should start looking at their homes as an investment vehicle?
Yeah, I would say too, though, even if you look, I think whether it was the 50s, the 60s, 70s, 80s, 90s, and so on, the prices were shocking then too. I mean, it's all quite relative to the time that we're in, right? So if you speak to, your parents or their, or someone else's parents, they'd tell you that that was an awful lot of money for them at that time as well. It was as shocking to them in their era as it is to us now.
And what about, using real estate as an investment vehicle, whether it's your home or buying a rental property? What York Region? How does that fare out from the investment standpoint, like buying a duplex or something like that? Is there a certain area that is really strong in that, or?
Yeah, go ahead. No, you go. I think buying your principal home is different from buying real estate as an investment. If you're buying your principal home, I look at it from a totally different point of view. I look at it at a very long term. It's a forced saving. No matter what point in market you get in, it is for your kids, and you have to live with your family in that house for a very long time. So it's kind of a forced saving. It forces you to save money for a long term. So it's a very good investment. But coming from the other perspective, that if you look at real estate as just purely as an investment, then cash flow becomes the key factor that you have to decide whether you should buy that property or not. Other than cash flow, there is another important factor that plays a role. I mean, the chart that was showing it is a national numbers across Canada. As we all know, real estate is local. And even locally, you're not necessarily going to look to what has happened to the past in that region or that city. You have to look and find out what's going to happen in future, what's going to happen, to the infrastructure that's going to come up, whether there's a growth in population, because a region or a city or a town might be booming in the past, but it may not necessarily appreciate in future. So coming back locally to York Region, as we know, numbers after numbers show that population is going to grow in this region. Population and people are the key factors that is going to drive real estate prices higher in this region compared to, let's say, average provincial. We are higher than average provincial. We are growing faster and bigger.
What about we touched on real estate, a second property. Is it affordable, or are rents able, like if you buy a second home, will it cash flow positively? Are you in a negative? Who can comment on buying a second property on that?
Sure, I'd be happy to. Go ahead. The ideal thing to look for when purchasing an investment property from a cash flow perspective would be to have more than one income under one roof. So the ideal scenario is to have a retrofitted or legal basement apartment or alternate dwelling under one roof, so you have an income from upstairs and down, for example. And as a result of that, that's when it really becomes beneficial. So not only in those cases, most of the time they actually not only carry the mortgage and associated costs, there's actually a positive cash flow. So it becomes a fantastic investment. Not only are you making money on a monthly basis, but the mortgage that you've taken out is being paid off by others, and based on historic numbers, the house is going up as well. So it's about the best investment out there.
Is York Region known for a lot of rental properties?
Surprisingly, yes. And surprisingly, our rents are much higher than they are in the city.
Throw a number at me. What would be a two-bedroom
basement apartment?
Yeah.
I don't know.
$1,100?
Yeah, I'd say in that range. I mean, $1,100 a month is a lot. That's going to carry today's rates, what, about $250,000, something like that?
Yeah, somewhere close.
So that's just from the basement. So you can buy some, semi-detached properties with a basement apartment, 350, 375, whatever the number may be, and 250 of that is just being carried by the basement income alone, never mind upstairs. So there's a lot of opportunities in that regard. And the reason that our rents are higher than they are to the south of us is because of, again, supply and demand. We just don't, if you look around, there's not a lot of apartment buildings or places like that for people to rent. And as our community is bringing more amenities here, there's more of a need for people to rent than ever before. So our rental prices are actually going up.
So you're tailing that to that the York region is a great place to live. So it's also driving the rental stock, sure, which is creating a demand for rent. But let's just kick around some numbers. So you mentioned a 2-bedroom, 1,100, and then I guess the upstairs would be what, 1,500. So it would be about 2,600 of total income from a duplex.
Sure.
And what would be the cost then of a duplex that we could buy? I don't know, Bradford or Newmarket.
What would that be in Bradford, Tina?
You're probably looking in the 350 range.
And what would you say here?
And in Aurora, I just sold one at 419.
419.
And Newmarket's probably somewhere in between, right?
And so if we do some quick math, yeah, the mortgage would probably be about 1,500. So there's, then we got expenses and things, but there would be still a cash positive, because as long as rents are still you have to have that cushion, right? I mean, to say that, buying a rental property where your mortgage equals your rents, I think you're in a losing venture for sure. But you're going to need a cushion. You're going to need a cushion for sure.
I think residential real estate investment is, I think, one of the best opportunities that an investor can have compared to other options such as GICs or stock markets and whatnot. And here is two main reasons. Number one, since 80s, we have not built much of rental apartment buildings, because most of the developers build the condominium complexes because it does not make sense economically for them. They make much more money with building condos. I think the second reason is that most of the people that come to this region and Greater Toronto Area region, they're newcomers. And we all know for the first couple of years, they don't buy houses, they rent. And then eventually they start buying. I mean, this was numbers from Stats Canada that more than half of newcomers coming to Canada, they first try to rent for the first couple of years. So we don't have the rental stock, so we have to have some other options such as basements or townhouses that is a little bit more affordable. So it makes a perfect sense from investment perspective as long as it somehow cash flows.
And when you mentioned that no one's building apartment buildings, well, they say the new apartment building is condos.
Exactly.
And so that's where I've been hearing that investors are buying up condos.
Yeah.
Is there anything that a pitfall, a condo purchase versus a home purchase, like they should be looking for? Like, are there any differences in renting out a condo versus a home?
Well, there's some advantages to a condo. I mean, for one thing, it's self-managing. If you have a tenant in that condo unit and they're in any way abusive or breaking any rules, it's quickly policed by by the management staff of that condo corporation. The downside to it is, in my opinion, that doesn't escalate anywhere near as quickly as a detached or a semi-detached house will, because you're sort of pigeonholed by the floor plan of that particular unit. So in other words, if you own something at unit 809, and any 09 sales, which are typically the same exact square footage, will pretty much dictate the range in which you can sell that unit for, regardless of improvement. So the upside to the investment isn't as good, but the ongoing sort of hands-on requirement is certainly a lot lighter for the
management side.
Yeah,
so you're saying that obviously a detached or ground home is a better investment from the appreciation side?
Absolutely.
I agree with him, and here is a couple of reasons. First of all, most of the investors make one of the common mistakes that they make when they crunch the numbers. They look at the condominium fees or condo fees when it is just building. We know in the next couple of years it will be much higher than the numbers that are shown, unfortunately. So they don't factor in those numbers. The second reason is, as the buildings always depreciate, it is the cost of land that goes higher. So when you own a house, you own a land. You don't own a unit somewhere in the air. So that's why you have better chances of your values increasing. And if we look at the numbers in the past, we can see that as the condominiums get older, their prices are not increasing as much as houses are increasing. So when they get, sorry, go ahead.
You know, it's interesting. Not even talking about real estate as an investment like buying secondary homes, but looking at just buying your own principal residence.
Sure.
I can give you an example of a particular neighborhood in Bradford where the people who bought from the plans before shovels were in the ground, those people doubled their money in less than 10 years.
Wow.
So there was a street where they were going for about $2.25, and within 10 years they were selling for $4.50. Wow. So where else are you going to make that kind of money? Where are you going to make that kind of money in 10 years? Not in a GIC.
And I think it's more than an investment, because the other factor that we don't tend to talk of that often is you've also had the benefit of using that. You know what I mean? Using that place to live, you know, having the benefit of your family being in there.
Somewhere.
For sure. So that further compounds the rate of return for sure.
And in terms of, we're going to wrap up a bit here, but in terms of the future for York Region and housing prices, you guys are all in agreement that it's a stable market and we're not in a bubble? I mean, any last comments on the bubble side of...
You know, I think it's safe to say that we're in what we'd consider to be a balanced market. Now, sometimes a balanced market can slightly favor sellers or buyers. So I think we have a balanced market right now that slightly favors sellers, but all in all, it's balanced.
Wow.
Yeah, I would agree with you,
I
Tina.
would agree.
I would agree with that too. We're looking into a flat market for coming years.
Well, it seems like we've got a consensus now on where the housing market in York Region is going. That's it for this edition of Perspectives. Jamie will return next week and delve into new topics with new guests and, of course, new perspectives. Thanks for watching. My name is Mark Vasilius, and we'll see you next time on Perspectives.